Good afternoon and welcome to the daily wrap up here with ForexAnalytix. A little bit later start. As I've mentioned before in the past, is we always try and stay with a start which is around 2 p.m. But we always have been advising for the first couple of weeks was that it can be a little bit later. It could be a little bit before then. Obviously, situations like FOMC can push it later. This time I had a little bit of a personal issue that I had to get taken care of that was not expected, so pushed the time back. So apologies on that. But the show is recorded by ForexAnalytix and presented a little bit later. So let's go on and touch into where we're at, and let's go on and move into the, I like to call the medium dated charts, which for me is going to be the 2 hour. So we're seeing the euro move higher, and let me go on and change this about here. Now, one of the things that we were talking about the last couple of days, I mentioned if you were on the wrap up yesterday afternoon. If you were on the wrap up yesterday afternoon, as well as the European crossover this morning, we had people concerned that the euro hadn't taken off to Venus, on Monday. And I thought that was, kind of ridiculous because, as I said, goes back to what I say, it's all relative. And, from ECB day, we had actually rallied 150 pips in just a little over 24 hours. So, yeah, the market needs a chance to digest, okay? And we're actually still pushing a little bit further. I was looking for possibly the euro might pare back a little bit today, give some opportunity to, load up on some of these longs. But Trump was tweeting that he thought that the euro was very undervalued. That allowed for a little bit of a bid here. And we're still pushing a little bit higher. It's been a relatively quiet day. We'll look at here at the 2 hour. Been in a fairly tight range, okay, here. And there's still some opportunities. I mean, this is a key area here for the euro here at this 1324. But we're starting to add a little bit higher. And one of the things we're doing today, we're kind of like scalping around here for me, as that's primarily my focus. As I've said in the past multiple times, I'm never going to be the guy that's, hey, I caught 150 pips, 220. It's just not my style. So sometimes I'd be a little bit more active. And it looks like volatility has come back into FX. But some people already started to try and take the other side, and you have to be a little bit careful here. Now, one of the things that we're looking for in the dollar index, when we pull up our bias chart, we had it here for 96.58. Now, one of the things I was looking at, and I posted in the room on a very, very short-term basis, and I think we had that actually from yesterday. I was looking for potentially a move to 96.63. Well, we actually got down here as low as 96.64, so we might push a little bit higher. And we said, well, let's give it a little bit of extra room this today, so in case we do go on and pare back. And here's where we're coming up with that 96.58. But our bias chart support from yesterday was 96.63. I was looking for this to come in and fill right here. And when we move into the 15-minute chart, you'll see a little bit closely, and we just missed it by just a pip or a tick in that case. Let's go and move into that. So here's the dollar index, and here's that right there. Comes in at 96.63, and we just missed that by just a tick or a tick and a half. And this is what I thought. This is what I thought was going to actually happen on Monday. I thought we'd come down here, and that was our bias chart support, 63. I thought we could come down here, and that would confluence with the euro, making a move up to about 1333-ish, 32. We actually made it to, I think it was 31 at the time. And then we could rotate lower, and then we see a nice bounce back with the dollar. But that didn't come into play, and I thought, okay, we might even hit it in the Asian session. But finally, we rolled a little bit lower here. Might have been assisted by, Trump saying the euro is undervalued. We can move higher. And we've kind of just danced around here in this area. I would feel better if the euro paired itself back into the 1270s. but it's held up very well. One of the reasons it was held up, we couldn't push any higher this morning because we had some options above it, heavy, some heavy amounts too that kept it. Now we're kind of paring back a little bit, but you got to be careful with this. And let me go back to the daily chart. And this will be a very nice close if we can get stay above this 1324 right here. Now, a couple of people have scalped, try and take the other side. I mean, I myself came in today and scalped a little here, a little bit there. I feel more comfortable, though. I did take the short side on a couple of scalps this morning, but since then I was just scalping to the long side. I actually missed an opportunity earlier. One of the good traders in our room, Amir, he actually caught it. If you look on the 15-minute, had a nice little hammer bottom. And from there, we zipped up 15 pips. Didn't sound like much, but it's been a very, very quiet day. But that being said, you got to be careful with this. Look, this market really wants to go higher. Although, as I said, I know the euro has problems, but to me, I'm saying it's basically a de facto for what we're seeing here translate in the cash dollar index. And we'll get to that. When we did the Asian analysis before we started the week, we were looking at 96.91 for initial resistance. We had mentioned broke the uptrend line, blah, blah, blah. It overshot the bias chart on Friday by, it was 4 ticks, and we were looking for 96.63. That's what we had when we were coming in to the prior week. That was our target to come into, and we finally got that on Friday. But it said, if you look on there, it says resistance is 96.91, confluencing with the broken trend line. Well, we had already come close to tagging that on Monday, so we actually moved it up a little bit higher. I think we might get up to 97.11. This is a little bit concerning, even though I'm bearish the dollar, okay? I mean, I've been, questioning this move up in here, although I have to give it to the dollar bulls. They really kept pushing and pushing higher. We've already discussed multiple times why I thought, because of the increasing poor data that we've gotten, consistently. And we know that ADP was an absolute bomb and NFP wasn't, was better, but it certainly was nothing necessarily to, as they say, to write home about. And this is getting a little bit concerning because I would have thought we would have been able to bounce back up in here and look at my chops, looking for some great opportunities to short this thing at, and we're simply not getting it. And that's really beginning to be a little bit of a worry here. Got to get things. My concern is that, and that's what I meant, is you saying it's, a lot of people saying, the euro, it's a bunch of junk, it's not going anywhere. Well, I mean, it comprises 56% or 56.4% of the cash dollar index. So in a sense, it's de facto. That's what I'm saying. It's running up de facto in the sense that the dollar's coming off and the dollar has potential more room to fall. I'm not thinking it's going to go to hell in a handbasket, but we can easily, take out another 50 pips before we even get to the pivot. And we can actually come down to, which is my target for this week, coming into potentially 96.06. So you can still go nearly 3/4 of a full point before we get down there. So my concern is, and Trump's already starting to get, already give some lip service, trying to push what he can. We can quickly slide over here. And if that's the case, this euro can really get scooting. And speaking of which, let's take a look where the euro can go to. My point being is, one of the things I shared in the room, someone was asking about, they were asking somebody else about, what their targets were. And I put on here, a lot of great traders in the room with different styles. I myself, a scout. My 2 cents is respect the technicals, regardless of your conviction, and also the flow. And then I was talking about how you can sense the flow of the market, how it's going. My point is, though, regardless of whether you're bearish the euro or you're bullish, one of the things that keeps us, and I've had my rear end handed to me lots of times when I don't simply respect the technicals, meaning, if you're going to be bearish the euro and you think, okay, I'm waiting for this bounce for the dollar, you got to respect these closes, whether they take place on a 30-minute. Obviously, there's more weight to a 2-hour chart, 4-hour, and obviously the most important weight beyond those is going to be on the daily. And one of the things I always say about, I put my resistance between, the touches, the bodies, because to me, I say that's put up or shut up time. Meaning, at that point, if you're wrong, you're going to have to get out. You know what I mean? So if we close above 1324, that's still, it doesn't take out this high from Friday, but we're still doing pretty good. And we're not pairing back. And when we do pair back, it's quickly, I won't say quickly gobbled up, but you find a nice undertone bid. So if you're trying to step in front of this, be careful, because the problem is if you do that, if you're going to do that, this thing, if it gets scooting, it's almost like you have to get out of the way, because then it's going to take out this area, and then we're going to 1372, which confluences with 1377 to 38%, 1378 to 78% of this move here. And the 38% is 1108 to 1815. A lot of people are talking about potentially this can't get to 18. Look, if this thing starts to take off, we can blow right past this 1372, and my guess is right up to here, 1388. Okay, see right there? So that was my take, is if you want to take the other side, and we're really not seeing too much as far as the flows, suggesting that it's going to give, be careful. That's what I say. You got to respect those technicals. The technicals, in the sense, is where those limits are, where you're going to have to place your stops. If you're wrong, respect those. Don't adjust them. I've adjusted them in the past, much to my own detriment. Got to respect that. And you got to respect also that this market is moving higher. And as long as it's moving higher, it's going to aid and abet the bullish traders. Okay. One of the things that I referenced when I was on Face the other day, and I mentioned it again, I'll mention it one more time, is that those that, the last 2.5 months, those that were dollar bulls had been rewarded, obviously for different reasons, a lot of good reasons, so actually. But the point was you could have made all kinds of mistakes. I mean, you could have been, when you should have been buying a dip, you chased the market and you bought the breakout. Whatever, you woke up in the morning, scratched your head, opened your eye, rubbed your eyes, and you just hit the buy button. And with the dollar index for the last 2.5 months, you're getting paid. Even if you came in at the doggone wrong times, you were still getting your money back overall. And I think that the playing field has changed, and now it's actually going the other way with the euro. Essentially, like I said, the de facto of the dollar index as the dollar starts to slide. My concern is be very, very careful here, because I'm getting a little bit worried that this dollar, and I'm certainly no dollar bull, is really not grabbing any foothold to move higher. We'll see what happens tomorrow, but if not, you're gonna this will be suspect to just dropping, because if we can't go higher, then those are going to start tightening up their stops, and before you know it, you hit a cascade of stops, and then one ends up, begetting another one. You know what I mean? As you say, lower prices beget even lower prices. We're going quickly moving to the other markets. It's been relatively quiet. Another one is this dollar CAD. We had talked about that last week. We were very, very concerned because of the poor showing. We've touched base on that, but really what I'm trying to reiterate once again is once these markets start going, they don't mess around. And we talked about that, and really I'm trying to turn this back in to the dollar index again, meaning is, remember when we mentioned if we get a daily close above 34.77, it's a straight up sell. And we did get it on that Monday after we closed up on Friday, but it was a very poor bar on this close, or a very poor candle. And look how this thing accelerated lower and just kept on accelerating. Obviously, there's some very, very good data that came out of Canada as far as payrolls and for the 2 months running. So some reasons, but you can always find reasons why a market ends up breaking. But once again, selling begets more selling. So that's what I'm trying to touch in here. Be careful with this dollar. It's just not holding up very well. In the dollar yen, you can see here we pushed up in here. We had our bias chart resistance. I think we may have moved it a little bit higher this time. No, we kept it the same, 876. And you can see here the market ran out of gas at 880. We're sliding a little bit. We're down to 851 here. So I'm not seeing a lot of changes. We have seen here the peso continue to drip lower. We talked about this, I don't know if we talked about it yesterday here, but in the European crossover, we said Hey, look, we can still push a little bit lower. And actually, here's our bias chart support down here, 1906. Because anybody that was thinking they were buying a bargain at 1923, those people probably have their stops below here. And we can get down there to about 1906. Lastly, we're going and finish up here. With the screen that we're on initially, and that's what's talking about the dollar index here. We had our bias chart support yesterday, 96.63, and I thought this was an area it was going to go to. I actually thought it was going to happen yesterday, and I thought, boy, we'll get a good bounce from there. Well, we are bouncing. We made it to 96.64 today, so only one tick off, although we had actually moved our bias chart a little bit lower. We are moving higher, but it's not like as if we're going gangbusters, although it's a little bit later on in the day. Look, we got to get this dollar index. It needs to go on and react sooner or later. Now, one of the things I have it up here is a 15-minute chart. We're now beginning to finally start to see a little bit of volatility in FX. I mean, we're bouncing around. Some people might laugh and go, 15-minute chart. But I tell you what, what I was sharing with some of the guys and gals in the room was that, you know, you have to not only respect the technicals, find out what the market is reacting to. And for me, I use the 2-hour charts, and then I use the exponential moving averages against the 30-minute. But what I am seeing, what the market is reacting to now today is exceptionally quiet. But it's reacting very well to these 15-minute levels. So right now, if you're day trading / scalping, at least for me, I'm focusing on the 15-minute charts. Those seem to be working very, very well. Got it. Like I said, we did make this run up here in the dollar CAD. We had our bias chart resistance at 33.08. We can take a look at that. It's a level that I had on the 2-hour chart. Had 33.08. The market topped out at what? Topped out at 33.09. Okay. So not bad. But that we went with the levels on that one. But as mentioned, we can see here with the S&Ps, that's moving higher. I still have some concerns with the S&Ps. I was talking to some people very, very early this morning when the S&Ps were still moving higher. My take is, and really we don't talk really that much about the S&P, but my take is, and we've had such a huge move on the way up here, I think we're going to be heading lower over the course of the summer, what I think is going to be a drip lower. And my take is, my 2 cents, fundamental 2 cents is, look, here in the States, we don't have much as far as pensions. So everything's focused. They're pushing it towards 401ks. And as these baby boomers keep getting older and older, they're seeing their let's go and move this to look, they're seeing this doggone thing move up and down like a yo-yo. Now, here's the deal, and I'll close out with this. The euro's at 13.27 right now, 13.28. Look, it's not like Bitcoin, folks. Okay, people aren't putting some people may, but I'm just saying their savings for retirement stuff into Bitcoin. I'm just saying this is the S&P. So look, this thing is up and down like a freaking yo-yo. And, if you're moving in towards closer to retirement, and even if you're not, you got to focus on those that may, because remember, the population of baby boomers continues to be expanding. And my take is, after this big old washout we had, and then we have another quick washout, I think on this move up, you're going to have people starting to liquidate those positions. Say, I got to move into something safer. This is my retirement. I mean, what the heck am I going to have? I mean, what if I'm up in here and I'm about ready to retire in another year or a couple of years? The next thing you know, I'm down here. And next thing you know, I'm not retiring in 2 years. I'm retiring another 5 or 7 years. Hence, my thought is, I think that we're going to go on and at this point, start to see some liquidation. We're actually coming into a pretty good level right here at this 28.96. You can see the touches coming across. And I think for the duration of the summer, we'll be starting to look to go on and slide back. And that may, in and of itself, may have a little bit of a pressure against the dollar going forward, but we'll see how that goes and plays out. That's what we have for the European crossover. The daily FX wrap up. Apologies on the start. Had a personal issue, but I've said I've tried to counsel is that we always try and make it around 2 p.m. There are going to be times, as I mentioned, that it's going to be earlier, and there's going to be times it's going to be later. This wasn't one of the times it was planned to be later, but personal circumstances cause that. But thank you very much for joining us here on the Daily Wrap Up. If you join with ForexAnalytix, like I said, you can actually be with us on the European crossover webinar, where we set up the daily levels that we talked about. Like I said, dollar CAD, we missed that by actually 1 pip. But we've set up the daily levels, which is pretty much set up for intraday trading / scalping. A lot of traders, some of the traders do day trade, some scalp, but most of them hold it for a few more days, but they can incorporate that. But the good thing is the webinar is taped, and Stelios plays out about an hour and a half before the New York Open. But like I said, try ForexAnalytix for 10 days. Take a look at exceptional platform with real-time news here, especially for the headlines. It comes out very, very fast. But thanks once again for joining us on the Daily Wrap Up, and we'll catch y'all tomorrow.